has applied the brakes on the EV transition, perhaps due to skyrocketing costs, ongoing labor issues, and a lack of consumer demand. It seems the EV business model may need some reevaluation. Last month, I had the opportunity to speak to Scott Shalday, the cow guy, about the thousands of Rivian vehicles parked outside our doors at Advanced Trading. Despite the smoke and fire in the industry, companies keep producing high-priced vehicles that the average consumer can't afford. This also comes on the news that Tesla looks to cut 10% of its workforce. I checked. That's 10 or 12,000 people. To delve deeper into this situation, let's bring in Rebecca Walser. Rebecca, welcome to the show. Scott will be back soon. You won't have to deal with me anymore. You look great. How is the weather in Tampa?
You know, we're finally getting some spring weather, so thank God for that. I was so over the cold.
Well, good. People, it's tax day. Markets are going down. We're involved in new war. How are people going to how are they going to afford these e-vehicles?
You're just so right, Tommy. They're not affordable for the average salaried person in this country. And, you know, that is the problem. And unless you're going to continue with government subsidies, but it's not a free market situation. If the government is trying to push a green agenda and basically has decided EVs are the way to do that, you know, you're talking about when you go to replace the battery, Tommy, on some of these Teslas and these electric vehicles, the battery can cost $30,000 itself, you know, and then you had in Florida all the Teslas that literally caught on a chemical electrical fire because those batteries can't just be put out a normal way. So you had videos of 4 fire trucks trying to put out one battery. So what this is the cart before the horse. This is the government deciding electrical vehicles are the solution to our green combustible energy problems. Let's defossilize our fleet of cars by 2030 and putting arbitrary net zero by certain dates. And the economic reality is that's just not possible. And guess what? Our government doesn't have enough money to keep the subsidies going, to keep car manufacturers in business. If the economic model, as you said, if a Rivian is selling or being cost $120,000 to make and selling for $80, that is not going to work. And when you have economic models that don't succeed with private business, you're really looking at socialism and communism, the government getting involved in the actual capacity of production.
I knew we had the right person on for the show. I don't know if you were listening to Jim Urio and I before, but we're talking about how aluminum surged last night, up 7%. Copper surged. The exchange said we're not going to let people deliver metals from Russia to the exchange. That doesn't matter maybe to the average person, but don't you need a lot of metal to make a battery? And so as they're trying to push this agenda, they're inflating the very goods, and then we're fighting with everyone. It's a little bit of a mess, isn't it?
It is, Tommy, but what's happening right now is you had this consensus of central banks really buying gold in the last couple of years beyond what they normally do. And now what we're seeing is they're starting to buy all metals, platinum, palladium, copper. And so what I'm seeing is almost like a crack up boom that the central bankers of the world and the other countries of the world are interested in de-dollarizing. So they're getting rid of their dollars by buying metals. And anytime you see this, it does inflate other asset prices because they're buying these metals at higher prices with the more dollars that we printed in the last, really since coronavirus 2020. But really, if you go back to 2008, we've followed monetary theory, quantitative easing, and like next to zero interest rates. And when you have that for 15 years, that creates asset bubbles in every asset category. We really, truly do have an asset bubble in equities. We do have overvalued equities in the stock market. And we absolutely have an asset bubble in the commercial real estate market and the residential housing market. So all of these things, unfortunately, have been, I won't say hyperinflated, but certainly inflated substantially since 2008. And when you start to see all of the bankers buying, central bankers, we're talking about countries buying metals at this clip, this tells us something is going on here.
Yeah, well, you know, that move in gold, I don't know how much you watch gold, but gold was up $80. And I hosted the show Friday, and I got mixed up selling gold up 40, 50, 60. And by the time I came to host the show, it had broke a lot. But these are extremely volatile. I'm a professional trader. I have a seat on the exchange. To the average investor, it's tax day. How do you keep people calm? How do you keep people relaxed? You and I, we get excited. We go on shows like this. You're the best. But when someone calls and they're worried, what do you tell them, Rebecca?
You know what? Right now, it's kind of easier, Tommy, because they still are getting a mixed message of, oh, there's a soft landing or no landing coming, and we don't need to cut rates right now because the economy is too great. But then they're also seeing that, gosh, my grocery prices are up 15%, for real, and it's taking 2 jobs. So you really do have a bifurcated system, and you have people that aren't understanding why Wall Street keeps saying the economy is good, the economy is good, the economy is good. And so what I will say is this is sort of the beginning of the pain, and people should make their moves, I think, strategically now if you want to take profits, if you have a great position. But we definitely see economic pain coming in earnest this year into next year. And so really position your portfolio to be defensive because it's going to be a challenge. I can say that.
Well, people say wars are good for the stock market. We're now involved in 3 of them. Anyone has any trouble in the world, they come to America, right? If Americans have trouble, you can't drive to O'Hare Airport right now. We don't have enough time getting that. But what do you do? I mean, is war good, bad? I mean, we're involved. All these missiles went off. They said it cost $1 billion to stop those missiles on the Iron Dome, the missiles that were shot over the weekend. That's a lot of money. Who's the big beneficiary of that?
I really think that this is a precursor to trying to get America involved in a World War III. And I think a World War III is sort of being wished for by a lot of bad actors because they kind of want to move us to a central bank digital currency system. And World War III and economic collapse would all kind of merge into one. And people would just be like, oh, gosh, we have to move to this new system. So war is good in the sense of economically. It stimulates all of the big players of government defense systems that we know of. But other than that, I think all around it's bad. And I don't think a world war, because we're really on the cusp. If you look at the alignment between Iran and Russia and China with the BRICS bloc moving into the BRICS bloc in January of this year, it is not a good thing for us to be escalating this with Iran.
Well said. Rebecca.